Hello, welcome to Wander Financial. In our last video we talked about placing an order. I showed you how to buy FXC based on the trade alert. So now you can look at our portfolio. You can see we've got FXC in there, 26 shares that we bought. The next thing you want to do, generally right after you place the buy and that's filled, is you want to place your stop order to protect yourself to the downside. Risk management is the key. So the first thing you would do, take a look at the trade alert again. You can see here the stop is at 73.95. Okay, so we're going to go right back on in. You can click on right here in your portfolio. You click that, it'll bring it right up. You click close positions. That'll show sell to close. That's important to see that there. That'll show that you're actually closing the open position. Next thing you want to do is you want to click stop limit. This is the price that your order is going to trigger at. So we said that was 73.95. What this means is if the stock ticks down, as soon as it trades at 73.95, that's the level that's going to trigger your order to sell. So the next thing you want to decide is what your limit price is. I usually just limit it to the price of the stop, especially when something is as liquid as FXC. They've got a tight bid-ask market. They've got high volume. Basically, once 73.95 triggers, 999 times out of 1,000, you're going to get filled right away at 73.95. However, you can also you can set your limit price lower if you want. You could set it a couple cents lower, maybe 73.92. Basically, the order will trigger at 73.95 to sell, and as long as they can get 73.92 or better or higher, it'll fill you. So the worst you can get is 73.92. However, as with anything, there's always a chance that something crazy happens, in which case your stop could get triggered with the trade below 73.95, but you wouldn't be able to get filled below your limit, or I'm sorry, above your limit, in which case the order wouldn't fill. So you could be left as say this just kept tumbling and went down to 71, you would still be in it. You'd still be long, and the order would have triggered, but it wouldn't have been able to complete the order at the price you indicated. The other option is to do something different here. You can do stop. You can do a stop market. Okay, here's stop market, in which case you can type in the order 73.95 at that level. That's your stop price. That's where the order is going to trigger, and then as soon as the sell order triggers at that price, it's going to fill you at whatever the highest bid is. So that might be 73.95, it might be 73.90, it might be 73.50. I mean, chances are very high that it's going to be 73.95 or 73.94 in FXC, but in other less liquid stocks, you're going to have to consider that. So again, I usually I just use a stop limit. I'm going to fill this one in here, 73.95. When I'm limited to 73.95, I'm usually watching the markets. If you're not going to be watching it closely, then you might want to give it a few cents, just to put your mind at ease. But I'm usually on top of the markets watching this, so if I would know if it missed. So I've done that. I got my limits all set up. Next thing I want to click is good till canceled. We'll leave the order open for, I believe, 60 days with Tastyworks. Doesn't really say, but anyways, you can choose the date too, I guess. But I just clicked the good till cancel. That leaves the order open for up to 60 days, I believe. So you won't have to do it every day. You don't have to do it tomorrow, and it won't just disappear at the end of the day. So once we've done that, we review and send. That'll show me now the difference between the price that we bought it at. I think I bought this at 75.43. The stop is at 73.95. It's 26 shares. Your realized loss if that order fills will be $38.48 plus commissions. So that is all there is to it. That will protect your downside. That's really the most important thing. The other nice thing about stop orders is it kind of takes it out of your hands. A lot of times, especially with new traders, they might be long and trades going against them. It reaches their stop price of $73.95, but since they didn't have an order in, they might talk themselves out of it. It's real easy to do. You can think, oh, come on, maybe just a little bit higher or a little bit lower. It's going to bounce here, whatever, and pretty soon you know it's at 70, and you're still in it, and there's really no good reason to be in it. So it's important to have a solid stop in place and to get that order in. So I'm going to click Send to Order. And as soon as my internet catches up here, that will be placed. Shooting this from Guatemala City right now, and I got a timeout on that. Okay, but let's try again. Send order. And that time it went through. Good. Alright, so now you can look at your account. You can click here. That'll show you've got 26 shares and you've got an order in to sell 26 at $73.95. And that's all there is to it. Now you've got your stops in place, you're all good to go. Hope that helps, and I will talk to you again soon. Thanks for watching.
Thanks for watching, and don't forget to hit that subscribe button.